Good evening. This is the Elliott Wave update for the S&P 500 for Wednesday, June 15th, 2022. The S&P and the balance of the markets basically reacted to today's interest rate hike pretty much in the fashion that I thought they would. In fact, the moves were very much in line with what I was anticipating, which was once the rate hike was announced, we get a quick slam dunk lower. And then once that Powell began his press conference, they would just buy the market and buy the market and buy the market, basically forming a V bottom. And that's exactly what happened. So let's take a quick look. There aren't, again, as much as we're going, whew, that news is out, there aren't a lot of changes to be making. The daily chart continues to remain in the same pattern. I had anticipated a fourth wave bounce. We are getting that bounce. It may be over. It may still have a little bit more to do, yet to be determined and seen. So dropping straight down, let's go right down to that hourly chart and take a look to see what actually happened. Again, just kind of noticing the minor third wave completed yesterday. And right there. And so we started to have that relief. We rode up, but we got down pretty low. We got all the way down to 37.23 on the sell-off after the rate was raised, and then before the press conference began. But then the market turned, and it went, and it went, and it went, and it went. So basically, what is all of this really showing us? Let's take a quick look. If that's the low, then we are likely, I'm thinking that this is the A and a B and a C for the A, and a B, a C. I don't know. A, B, C, possible. So, and if that's the case, that's A and that's B, and now we're in the C wave. The C wave continues to suggest that we may get up to the resistance. I'm just going to refine that resistance a little bit. And I need to go out one more. I got to go back out to the daily so that I can get this in correctly. We're looking for just retracements again for that right there to there. Okay, so now let's go back down to that hourly chart. So the retracements continue to suggest, as we said yesterday, 3,883. So about, and I'll even include it, it's like 883 to 893. That's going to be the zone. We need to continue to allow for that move. So we still have Asian markets to react to what took place here today. Then we have the European markets to react to what took place there. I have no clue as to what they may or may not do. I continue to look at the dollar, which has picked up a lot of volatility. First, it was like running up, then they got crushed, and now they're bringing it back. But, so there's still a lot of other things, again, in terms of what the market can potentially do. Now, we did reach an intraday high during the news conference at 3,843. Notice we're getting ready to close about 43 points below at, right now we're sitting at 3,794. So 794, 795. What if they decide they're going to push it up to market? That's up to them, but we can trade for another 14 minutes and then we'll see, but still a far cry from 3,843. So we still have essentially 40 to 50 points to the upside before we start smacking into stronger resistance, which could complete if indeed wave 4 is still in progress. Otherwise, if we start to break down from here, we've already broken through that resistance was at 3,816. We've also broken through and are holding right here at that 37.95 area. That's right where we are. We're right there right now. So it's holding this larger picture Fibonacci extensions on the way down. So it's holding it, but it's in a different pattern, but still It's a Fibonacci number, and that's where the market wants to sit and hold. Now, again, right below all of that, come on, no, don't do that. Why don't you just keep doing that? Good. Okay. You can see we've got a cluster, and that cluster is the 50, the 4, the 8, and the 20. The 4, the 8, and the 20 are pointing up. The 50 is pointing flat. Who gets to win? My guess it's likely going to be the 50. But if the 4 and the 8 and then the 20 successfully get above this 50, it will point to that we're likely going to be heading up into that resistance zone. We have the hourly 200 right above 39.31. I, again, am not expecting this big of a move in this wave. It's a fourth wave. So if we start to break here, it's going to basically start to invalidate the fourth wave. And then I'll have to take a closer look to determine what essentially is at hand. So once again, I encourage, do not be bullish, do not be bearish, trade the price action. Trading the price action, no matter what you're doing, if you're trading options, whatever you're trading, you're going to be trading the price action and not trying to look for like the market's going to go here or here. There's too much going on in the world, and there's too much going on in our own country to start to pin, oh, we're going to go up to new highs. Oh, we're going to go down to new lows. Both scenarios can be played out. Now, I'm not going to pick one. I just think that that's a recipe for disaster in and of itself. So I'm going to choose to trade the price action, and by doing so, can have a really good trading day when you get moves like you had today. Having said that, I am laying out what I think for the upside. The market would still need to give us a little bit of a boost from where we are and put in a pattern that is going to suggest that we're going to head back above 3,800. Right now, they are trying to push it higher to get the best mark they can to get the close on our regular session. We then start Globex in about an hour and 10 minutes, and then we could be, again, off to the races, and they just start buying it back up again. On the downside, it needs to break all those moving averages. If it breaks to 20, then we're likely heading down towards at least a retest of the low at 37.23. Break of that low brings us back down to 36.98, 36.26, 35.59. We'd be looking for a minute 5, which I've said could be a real doozy if they really get things going. So we do have some numbers tomorrow. We've got, wrong day, housing starts, jobless claims, and the Philadelphia Fed Manufacturing Index. This one in the day was a real market mover, and we would anticipate it and look and wait and wait. It could have a very strong effect tomorrow because it does begin to indicate inflation on the manufacturing level. Jobless claims, of course, there is a tie there. And then we have industrial production on Friday, along with our quadruple witching. So back in the scenario, we had all of those gamma explosions in the last couple of days as the markets just slid through a lot of strike prices all the way down. And today we had them pushing it all the way back up, not totally, but all the way back up, again, pushing through a lot of strike prices. So one side, they did getting neutral, so to speak, would have been selling. Today, getting neutral possibly was buying. So how much of it is actually more bullishness, or how much of it actually just position adjustments? So there's still a lot going on. We have that quadruple expiration on Friday. And so please just continue to trade the price action. Trade what is in front of you. And let me just clear that up a little bit before making any types of decisions in terms of being bullish or bearish. In any case, I am going to end it right there. And the next update will be on Thursday, June 16th.